Your wealth deserves stability, expertise, security. Your wealth deserves LGT Crestone, private wealth with over a century of global heritage.
Hello and welcome to the Global View on this Tuesday. Well, global equity markets were mixed overnight with European shares recovering from a 6-week low on Wall Street. The Dow, it finished in the negative, but the S&P 500 and Nasdaq gained, led by tech shares despite rising treasury yields. Nvidia shares, they jumped 8.5% as HSBC raised its price target on the stock to $780. It's ahead of its earnings results later this week, when it's expected to forecast quarterly revenue above analysts' estimates. And in fact, Nvidia's stock is up more than 220% for the year so far, while the Nasdaq, it's up 29%. Just elsewhere in the tech sector, Palo Alto Networks surged almost 15% after the cybersecurity firm saw results of strong quarter and a forecast for annual billings above expectations. And VMware jumped after the UK's competition regulator cleared Broadcom's purchase of the cloud computing firm, which also boosted Broadcom's stock. Well, for a preview of Nvidia's earnings, I caught up with Angelo Zino from CFRA.
I had an earnings here Wednesday after the close. I mean, we remain very bullish on the shares here. We do have a buy recommendation on the company, and it's all going to be about their data center business, to be honest with you, and kind of, you know, all the traction that they're seeing in kind of that post-chat GPT environment. And, you know, essentially, you know, we've kind of saw an unbelievable kind of guidance back in terms of their last quarter. The July quarter results here have definitely set the bar up higher for this company. Essentially, kind of on the data center side of things, we're looking for a near doubling in terms of data center revenue on a quarter-over-quarter basis, as well as on a year-over-year basis. And, you know, also, you know, maybe a little bit less kind of intrigued, but on the gaming side of things, I mean, that's a segment that had been seeing declines on a year-over-year basis for the last 4 quarters, kind of in sympathy with what we've seen in terms of a lot of the consumer-oriented aspects of the semiconductor market. And we do expect that business to turn towards positive year-over-year growth here in the July quarter. And I think, you know, most important will, of course, be the guidance for the upcoming October quarter. And, you know, in our view, expectations are reasonable and attainable, but of course it is a supply-constrained environment out there for GPUs, and the guidance will be completely dictated on whether or not Nvidia will have enough supply out there to meet that demand environment.
Angelo, given the performance of the stock thus far, certainly this year up some 220%, should there be any disappointment in the results, it's likely to be punished, is it not?
I mean, most likely, yes. I mean, but this is the great thing, at least right here in the near term, right? I mean, you kind of look at the demand environment out there for GPUs. You kind of look at where the cloud spend right now is from the biggest cloud providers out there. We think there's actually very little risk out there in terms of kind of the ordering right now from those companies. And if anything, I mean, the letdown would be more on whether or not the supply would be available to kind of meet some of that upcoming demand. But as far as kind of where the expectations are out there, and actually where the valuation is out there, I know there are a ton of people out there screaming about the valuation, but when you kind of look at Nvidia's valuation relative to historical levels and relative to where the growth trajectory here is over the next kind of 3 years, we actually think the valuation is actually very reasonable and kind of in line where the company has traded here over the last 5 to 8 years.
Angelo, aside from the upcoming symposium at Jackson Hole, is this Nvidia result, is the market going to be is that going to be pivotal for the market, do you think?
Yeah, I mean, listen, as far as kind of this tech trade is concerned, right? I mean, all eyes will, of course, be on Nvidia, especially this week. And I think kind of there's a lot of the excitement as far as AI has been concerned has definitely been centered around Nvidia and kind of that guidance they had provided 3 months ago. And when you kind of think about looking ahead, I mean, the expectation here right now is really a lot of those software-oriented companies, a lot of the cloud companies and the likes of Microsoft will able to kind of see some significant pricing power and push through the increased costs that they're seeing on Nvidia's side of things, as well as other chip makers and infrastructure spend out there to customers in the coming quarters. So the fact whether or not kind of Nvidia continues to see that strong penetration, I think is extremely important for the market here, and for them to continue to talk up the AI play, the software opportunities on their side of things, I think will be extremely critical for the momentum of tech here as we kind of finish out the second half of the year.
So Nvidia essentially struggling to meet demand for its chips there. What though of the China side of that demand, given that we have seen that companies there are stockpiling chips over concerns about those US exports. Is that a potential headwind for the company, do you think?
I think it's a risk. I mean, when we kind of think about the two biggest risks out there for Nvidia, I'd say one is the China risk, and two, I think, is the pricing risk, right? I mean, Nvidia is pricing their GPUs right now at a significant premium because of the supply constrained environment out there. But when we kind of think about China specifically, let's call it about 20 to 25% of their revenue pinned to China right now. But when we kind of think about potential kind of additional restrictions that could come into play here later this year and into 2024, potentially maybe long term about 5 to 10% of their revenue is really at risk when you kind of back out some of the gaming type of revenue and maybe some of their older type GPUs out there. So there is some risk out there as far as the China story is concerned. And more importantly, if they were prevented from selling a lot of their leading edge chips or GPUs into China, it does limit, right, the addressable market out there for Nvidia. So it does become also a longer term risk out there in terms of the demand trajectory for the company. So yeah, I mean, China absolutely kind of one of the big risks out there for for Nvidia.
And what of competition, albeit limited, but with its rival AMD, what likely response are we going to get from AMD, I guess particularly in terms of its pricing, do you think?
Yeah, so as far as AMD is concerned, and to a lesser extent Intel, right? I mean, when you kind of think of the GPU market out there, Nvidia's got essentially kind of a controlling position out there. Over 95% of the GPUs kind of sold in the data center space, essentially Nvidia based. I mean, they have kind of a stranglehold on the market. We think maybe that 90% kind of market position is probably unsustainable long term, but we do think they continue to sustain at least an 80% share position. So, and when you kind of think about the accelerator market long term, we think over the next kind of 4 to 5 years, it has the potential to grow at an annualized pace of about 40 to 50%. So even if Nvidia were to lose some share out there to AMD, and AMD is ramping up kind of their GPU, their kind of MI 300, which has kind of been sampling at customers and ramping in the fourth quarter of this year. We think AMD will find success there. We think there is an appetite out there for a second player in the market, and they will see strong demand into 2024, which is why we like the AMD story. But even that being said, it's not going to necessarily hold back Nvidia from being a great story here over the next 3 to 4 years. You need to kind of have a second player out there in the market. Cloud customers will demand it, and it'll keep essentially Nvidia honest to an extent, and potentially kind of help prices come back down a little bit. But nonetheless, the long-term story for Nvidia, even with a stronger AMD player into the market here, we don't think kind of really changes the Nvidia story.
And Angelo, just to sum up, how would you view earnings this season in the tech space?
I mean, I think overall, kind of the way we would look at earnings for the broader tech space, they've essentially kind of largely met expectations, and to a large degree, at least on the larger cap names out there, have exceeded expectations out there. I'd say to some degree, when you kind of look at the Alphabets and Metas of the world, that's kind of where you've seen some of the names maybe hold up okay, or maybe kind of seen some of the upside surprises in terms of earnings estimates. They are a little bit more cyclically driven. So the macro picture holding up a little bit better has benefited those companies a little bit more. When you think about a name like a Microsoft and Apple, they've seen essentially kind of greater multiple expansion kind of heading into the Q2 earnings season. So you kind of see those names kind of staying range bound here over the next couple of months until you can kind of see, at least on Microsoft's side of things, some real momentum on the AI side of things, which we think you will see. So overall, I'd say it was a good earnings season, but these names are running pretty hot into Q2 earnings season.
Angelo Zino from CFRA. That is the global view on this Tuesday. Stay with us. The Open is just around the corner.